So let's jump right into the advanced entry and exit system. The timeframes that we're using for this system are shorter timeframes than we are using with the beginner system. Here, we are only going to worry about the 1 hour, the 15-minute, the 5-minute, and the 1 minute. The indicators that we're going to use for this system are similar, but we're adding to what we were using previously. We're not only going to use the 8 and the 21, but we're also going to use the 50, the 200, and the 800 EMAs as well. The most important indicator on the charts is the TDI. That stands for Traders Dynamic Index, and this is going to determine the trend. This is going to determine probabilities, and this is where we're going to focus every single day. The first thing we're going to focus on every single day when we're analyzing a chart. As we move through this system, I'm going to talk to you about risk management and the exact entry signal, long and short, here in a second. But as we move through this system, please understand that the TDI is the foundation. I'm going to say it over and over again, but the TDI does not lie. And that's what we want to rely on when we are looking at trades. Candles will fake you out. EMAs will sometimes not paint the trend perfectly how you need it to paint, but the TDI will keep you safe. So really focus here as we move through on how to use the TDI properly. The risk management that you want to apply with this system is very similar to the beginner system. The stop loss is going to be at your entry candle, open price, plus your spread. I'm going to show you, like I said, a bunch of examples here in this chapter on exactly how to set that stop loss. Your take profit, we have two different levels. The first level is going to be 15 pips. The reason for that is because over the course of the back testing that we've done for this system across multiple pairs, across long periods of time, we found that the average winner is going to go between 15 and 20 pips. We want to lowball that to guarantee that we're banking money on every signal that presents. So when we do get a trade, the first thing you want to understand is that if it reaches 15 pips, that's where you want to look to book some type of profits. The second level of take profit is going to be 2R or 3R. You now understand what the R multiple is. So for example, if you were risking 10 pips on a trade, you would take some off at 15 and you would look to then take more off at 20 and then at 30. That'd be 2R and 3R. The risk that you're going to want to apply per trade is greater than what you're applying with the beginner system. Here, these trades don't present as often. You're not going to get 4 trades on one pair in one day with this advanced system. You're going to wait for the perfect entry and nail it. So what that means is you want to trade with a little bit larger of size. You can start at 1%, but I would not increase your size past 3% until you can be consistently profitable with the system. As you build confidence, you'll know when it's time to increase that risk percentage, to increase your risk profile. But at first, I would recommend 1 to 3%. So the entry signal itself can be described, when we're talking about trading it long, as the RSI value being greater than the liquid 50 and the trend line in the buy zone with a candle formation confirmation. You can imagine then when we talk about the entry short, that's when the RSI value is less than the liquid 50 and the trend line in the sell zone with a candle formation confirmation. Again, if you want to screenshot this, I know you're going to rewatch the course. This is really important because if you can understand it on paper with words, it's going to make it a lot easier to see it and read it with the chart. The exit signals are very important too. The first thing you want to understand, and I said this already, is that once you reach 15 pips, that's at the first point where you should be taking money off the table. You should be closing some of your position at 15 pips, if not all of your position. If you're brand new to trading, when you get to 15, you want to take most of that trade off no matter what. I don't care if you think it's going to 50. Take profits there. That is your guaranteed with this signal. That's where the money is there. If you're going to hold the trade and try to work it more, understand that a break of the 8 EMA is the first and safest exit past that point. If it breaks the 21 EMA with 2 candles or 1 strong bar, that's going to be your last exit signal. So you can see those last 2 exit signals are very similar to what we were looking for in the beginner system, because EMAs are very important levels of support and resistance. They are moving averages. They're moving support and resistance levels. So when we break them and hold underneath them or hold above them, we know that the trend could be changing, and that's a good time to get out of the trade. So the steps to this system, write this down. Number 1, you want to identify the direction using the liquid 50 on the TDI. That's, again, like I said, where the focus of all of your analysis should be, is on that TDI first. Where is the liquid 50? That's what you want to ask yourself. The second step within the system is that you want to identify if the EMAs are telling you to trade the same direction that the liquid 50 is. If the liquid 50 is in the buy zone for majority, or you'd like to see it there all day. That would tell you to be long biased on that 15-minute time frame when you're doing your analysis. If the EMAs can then come into the play when you analyze them and also confirm that you're looking to go long, now you have two indicators showing you confluence of trend, and you can start to feel confident that that might present a signal for you. It's not get in now, it's saying, hey, this could be something and we need to keep looking at it. The third step is you want to work through the checklist that I'm going to show you here in the next two slides. And the fourth step is enter when the RSI is in the proper position and the candles confirm the entry. The checklist that you're going to use every day, first question, like I said, is going to be, what direction is the liquid 50 telling me to trade? Is it in the buy zone? Is it in the sell zone? Is it swapping zones? Is it right at the stationary 50 value? Of those four, where is it? That's going to be the first question that you want to ask yourself. Number two, what's the EMAs? Basically, does it confirm what I'm seeing on the liquid 50? Because I'm never going to trade against the liquid 50. I will trade against the EMAs sometimes, not often, but sometimes, but I'm never going to trade against the liquid 50. The next question you want to ask yourself, and this is important, is are we outside the Asian range? We talked about how to draw that Asian range already here. You should understand from that chapter that if it's stuck inside the Asian range, if you can't break out that high or break out that low set during those first 8 hours of trading, it's going to have a hard time potentially moving the rest of the day. So you want to make sure you're trading a pair that has already broken the Asian range with a body of a candle, not a wick. You want it to break out of the Asian range with a body. Then you want to measure that Asian range and make sure that it's not a blown out Asian range. For example, if it's Euro USD, which is a base pair, if it's a 70, 80, 90 pip Asian range, that's blown out. You normally want things less than 50. For some of the cross pairs, you could push that 50 to 75 and say GBP NZD, that box could be 75 pips. But if that box is 100 pips, there's no way I'm trading it that day. It's already blown out. It already made a great move during that Asian session, and it might not have any gas to continue for new highs or new lows past that, right? We don't want to get caught trading in a range. The next question, very, very important, is there enough space on ADR to still make money? Average daily range, right? If we've already moved 40 pips and ADR is 60, there's only 20 pips left in there. If you have to risk 20 to potentially on an average day get 20, you might not make it. So you have to weigh that ADR question very heavily. If you're going to take a trade risking 20, but there's 80 left on ADR, that might make a lot more sense. That does make a lot more sense because you know that your risk-reward ratio is way higher, 4-to-1 versus not even 1-to-1. The next question, if all of those parameters fit, if you're inside the Asian range, if the Asian range is valid, if ADR has space, everything looks good there, is the entry candle that you're looking at coming off a solid EMA? Is it coming off the 21? Is it coming off the 50? Is it coming off the 200? Is it coming off an EMA or is it floating out nowhere? Is it coming off the 8? We don't want to trade it if it's coming off the 8 with this system. It's got to be the 21, it's got to be the 50, or it's got to be the 200. You want to also ask yourself, is the entry candle setting a new high a day or low a day? Those breakout candles are going to be very strong. Those are where you're going to really find strong, powerful moves that go 1, 2, 3, 4, 5, 6, 7 sometimes candles in the same direction for you. So if you can find an entry signal that also happens to be breaking out for a new high of day, new low of day, you have the potential there to see a powerful move. The last question that I want you to put on the checklist here is the entry candle a valid formation? Is it a 2-candle reversal? Is it a 3-candle reversal? Or is it a shift candle? It's got to be one of those three. And those three formations have TDI confirmation signals that I'm going to show you here in a second. If you can find something that fits all of these characteristics, one of the last questions that you want to ask yourself is the pair overbought or oversold yet today? If it's overbought, you don't want to be buying it because the probabilities are decreased. Of course, you can still do it, but the probabilities are decreased. So you're shifting the trade away from you almost. Just like if it's oversold, you might not want to be selling it because that shifts the probabilities away from you there as well. Remember, and I've said this a lot, with using these parameters, with using these indicators, having multiple indicators that can confirm a trend will help you feel confident in the entry. Because if you have greater confluence, you're going to have a greater probability of success. And the backtesting tells us that. Trading live, our live experience already shows us that. And just keep at the front of your mind, you could put this at the top of your notebook, that probabilities are everything, and the parameters on the checklist only will guide you to put probabilities in your favor. Nothing is perfect. Nothing is going to work in trading 100% of the time. But if you use the checklist consistently, the same way, over and over and over again, over the long period of time, you will come out profitable on the end. So let's talk a little bit about the 2-candle breakout formations that we did speak about in the earlier chapters talking about technical analysis. analysis. But now we're going to take this candle formation a step further. And we're going to do the same thing for the shift candle and the 3 candle formation as well. We're going to do each one step by step here. But the way we're going to make this a little bit more detailed is by adding TDI confirmation to what we're getting with the candles. Now, to review, when we're talking about a 2 candle breakout formation long, that right leg must close higher than the previous consolidation, than that left leg, for at least those 2 candles next to it. On the inverse of that, when you're going short, the right leg must close lower than the candle next to it, than that consolidation beforehand. You want that push coming off a solid EMA, and now I'm going to show you how to confirm the push on the TDI. So again, right leg must be higher or lower. If you're buying or selling it, you want it off the proper EMAs, and you want this TDI confirmation. So first, understand that when we're talking about the confirmation long, that is when the RSI value is greater than the trend line and the liquid 50 in the buy zone. More often than not, I would say 99 out of 100 times, the candle formation itself, as you can see here, that we've talked about before, will come off the 21 EMA, and the cross of that RSI pulling through the liquid 50 and trend line here will happen at the same time as well. Good trades, the RSI will actually already be in position in comparison to the trend line, and it will then cross the liquid 50 or maybe kiss off the liquid 50 where it pulls down to it and comes back up higher in this situation, off the liquid 50, keeping the RSI value in the proper position. Because remember, for it to be a solid entry signal, we need the RSI in the position in the proper zone. We need, in a position like this for long, the RSI to be in the buy zone, coming through the liquid 50 above the trend line, and that's going to be where we find the entry. So this separates, comparing it to the beginner signals, this separates us in that now you're not going to be looking at every single 2 candle or 3 candle formation wondering if you should be trading it. You're going to use the TDI and find these crosses, find these value changes where everything lines up in your favor to confirm the best 2 candle, and we're going to talk about 3 candle in a second, breakout formations. So short, it's just the inverse. The RSI value is going to be less than the trend line in the liquid 50 in the sell zone. You're going to get that RSI moving through in the sell zone. And there's other parameters to this, like we talked about overbought and oversold and things like that, and I'm going to tie that in as we get into the markups. But for right now, just understand the best breakout formations, like you see here, are going to be on your candles coming through the 21, coming here, in this example, off the 50, which is even better, and it's going to be confirmed with the RSI crossing in the sell zone under the trend line and under the liquid 50. That's where you're going to find the best setups. So when we look at this on a chart, this was the example that I just showed you long. Now you see the full chart. You can see here's the 2 candle formation, and here's the RSI crossing through the liquid 50. You can see previous to that, the last time it had happened was back here before 1 a.m. So you hadn't had any opportunity until 4 o'clock in the morning when this finally does break out. And in this situation, your stop would go, or excuse me, your entry price would be right where that candle closes, and your stop would go right underneath that entry candle open price. And as you can see, it holds the 8 EMA and very easily gives you 15 pips. It actually gives you 2R on this one. Now, again, the short example, the right leg has to be lower than that previous consolidation, as it is here, coming through those solid EMAs, and again, it's confirmed on the TDI. You see, RSI decreases its value underneath the liquid 50 and underneath the trend line, and that's where we see the breakout there. So again, we're going to run through a ton of examples here just to make sure you're familiar. You see the 2 candle formation on price action off the 21 EMA, right? Previous candle even pinned the 50, saying, yo, we can't even get to the 50. We're just leaving a pin. You see the strong push off the 21. When this candle closes, you see I have the time marked at 2:45. That's because that's when this candle closes and this next candle opens. That's why I mark it this way. You can see RSI is under the trend line, under the liquid 50, and in the sell zone. You see we're under 50, right? The stop would have gone right at that entry candle open price, which was here, and your entry price, like I said, was here at the close. So again, the stop is very easy to identify, and you can see this drops all day. But quickly, in that next about 30 minutes here, because you're looking at a 15-minute chart, that next 30 minutes puts you 2-to-1. And that's the kind of breakouts that you're looking for. Here, this one's a little bit slower, but again, trusting the method, trusting the back testing that we've done, you're still going to make money in this situation. So you see the push off, right? You see the RSI is in proper position under the trend line, under the liquid 50 in the sell zone, right? So the stop goes at the entry candle open price, which is right here. Again, entry at the close, and you wait. It actually only dropped for 15 minutes and then pulled back. But watch it. Does it break the 8 EMA? Just barely. But then what does it do? Come right back underneath it. Does it break the 21? Not even close. Does it even come close to your stop? No, it's just about halfway back before it ends up pushing back lower. So again, trusting the method, like I said to start the slide, trust the method, trust the stop, trust the take profit, manage the trade accordingly. Watch for EMA breaks, and that's where you're going to see if you should be in or out of that trade. So, of course, I'm not going to show you only winners. Here, we're going to see a losing setup. This is a 2-candle formation coming off the 50, off the 21, right? So you get excited. You'd buy it right here. Your stop would go at that entry candle open price right at the bottom there. And as you can see, 45 minutes later, you're stopped out. It comes down and pulls you out. It's a good trade. The RSI is coming through the trend line, coming through the liquid 50. It's above everything in the buy zone, and it's not overbought. So you'd say, Austin, this is a good setup, right? 2 things about it, and I'm going to give you a lot of detail because I think you guys are following me pretty well, and I want to just keep it moving. You see how the liquid 50 is actually dropping, even though the EMAs tell you you're in an uptrend? That right there is divergence, and that would keep me out of the trade. If we're buying the trade, I'd love to see a rising liquid 50 in the buy zone, or at least a flat liquid 50, not a falling liquid 50. And the reason for that is understand the definition of what the liquid 50 is. It's your market sentiment line. This is the true trend for the day. So if it's falling, even in the buy zone, if it's falling, is it logical to buy it? No. You don't know when the falling is going to stop. So why would you do that? So again, in this situation, sometimes, yeah, they're losers. Life goes on. That's why you never risk more than 3%. You keep your risk, appropriate, and you move on to the next best trade. You never chase these trades. If you get stopped, move on and wait for the next best entry. Here, this is a really nice 2-candle formation, beautiful body off the 21, right? This, as I said here, breakout shoves for a new low of day, and I think that that's the most important piece, and I said that earlier when we were talking about the checklist. As you can see, it consolidated here at 2 o'clock in the morning, 3:30, off this price that it couldn't break. Set it, tested it, couldn't break it. So when we come back to it and break right through it, not a pin, not anything like that, a strong body through the price that was set right here with these 4 bodies, once we break through, you know that it's probably, and I always say probably because it's always, there's always a probability for it to not work out, but it will more often than not move lower in this situation in the direction of that breakout. So here we break out for a new low of day, and as you can see, it holds the 8 EMA all day, 4:45 into 8 a.m. And look at the liquid 50. Look at how it's dropping. Look at the RSI. Look at how it's coming through that liquid 50. Look at how it's already under the trend line. That's huge. Again, this starts on the TDI. That candle formation is just teeing you up. It's saying, hey, we're ready for you. Hop on in. TDI is what's really going to tell you the trend, though. So let's talk about the 3-candle breakout formations. Again, this is similar to the 2-candle, right? But it's 3 or more candles to end the pullback, signaling that a breakout potential is coming, right? The right leg of these must always be off an EMA, like we talked about, the 21 or the 50 or the 200, not the 8. And it must be higher or lower if you're buying or selling than the consolidation previous. So it's very similar to the 2-candle formation. Here, you see this is the 3 candles, right? Off the 21, RSI comes through, and look, it's choppy. But if your stop was in a proper position, it ends up moving lower as the day goes on. Liquid 50 drops, RSI is in proper position. And again, if you got stopped, you watch it, and look, here's a 2-candle formation right here. That right leg is lower, you could re-enter there. So it will give you multiple opportunities, and look at the TDI to be able to take advantage of this trade, take advantage of trades like this. You see that 2-candle formation, you see the RSI cross, and that's where you're going to find the best breakouts. As the price moves lower here and the RSI isn't coming lower, that's not a time where we would want to be in the trade. You want to be in when the RSI is moving into the proper position. Here's a great example. This is actually counter trend because the 800 EMA is going flat across your screen above price action. But the 3-candle formation off the 21 and the shorter term EMAs with the 50 underneath are telling us that we're actually moving higher. So if you had bought it here and put your stop at the bottom of the formation because you had your RSI cross, this would have made you really good money as the day went on. As you can see, it gets to the 800, quickly moves through that, comes back to retest your entry price, but then as you can see, as the day goes on, it actually ended even higher. So how do you do this? How do you take advantage of moves like this that are counter trend? Well, you trust the TDI. That liquid 50 is rising and it's holding in the buy zone beautifully. It's also not overbought, so there's nothing to say, hey, this might not work out for you. And this 3-candle formation confirmed with the RSI cross is the best time to enter the trade. So let's talk about shift candles. We talked about this a little bit during the technical analysis chapter. You should understand that it's an 8 and 21 EMA crossover. However, when you add the TDI to it, and if you can find the TDI cross at the same time that you find the shift candle cross on price action, you're going to find the strongest and most probable shift candles. It's now taking it a step deeper, and it's not just leaving it to be an EMA crossover strategy. You're now using confluence of indicators with that TDI, with that RSI crossover to say, yeah, that's the right cross. Not that one that was before 2 hours ago. That wasn't right because the TDI wasn't there. Now we're getting the RSI cross into the right position. So let me explain that to you here. As you can see, the RSI comes through the trend line, comes through the liquid 50 here at 6:15. The candle is actually through the 50 and the 21, and that's where we shift. You see how the 8 crosses from being below to above the red line. That's your shift candle. So if you would have bought it here, your entry would have been at the close. Your stop would have been down here at the bottom of that entry candle plus your spread, and that holds the 8 EMA and shifts the zone all day in the overall uptrend. You can see the 200 EMA is moving across your screen, and price action is above the 800, which is also flat across your screen. Compare it to the shift candle back here. Look at where the 8 and 21 EMA cross. Neither of these candles is coming off an EMA like I told you it had to. It's not touching the 21 with its open price, and it's not touching the 50 with its open price. So this shift candle, even though it looks good on the TDI, you still wouldn't want it to. You want it to be good on the price action and on the TDI. And my example of from previous, when I said if it's a really good trade, it'll present multiple signals, that's this. It was going to move higher no matter what today. It was just testing to see if you were going to be eager and jump in before pulling out and pulling down and making you stop out potentially. So you wait for the proper entry. You wait for that shift candle cross with TDI confirmation. Here's another one. Great cross. Look how the RSI comes down through the trend line, down through the liquid 50. You're in an overall downtrend. The candle is off the 50 EMA. It shifts, holds the 8 and the 21 all day. It's a beautiful shift candle cross. And another one here to the short side. Shifts down off the 800, off the 50, off the 21, and through the 8. It's beautiful. TDI confirms it. Look at how the RSI was actually underneath the trend line about an hour beforehand. So it was already telling you it was moving into a downtrend, on top of the fact that the EMAs are overall here are saying to sell it as well. So multiple indicators that, yes, this is a good shift candle. I'd want to be in here on the close at 4:15, not 4:09, not 4:03. You wait for the candle to close. You get in at 4:15, stop at the entry candle open price plus your spread. Now, I know I said this already, but I want to make sure you understand. Just because the 8 and 21 EMA cross down in this example, that doesn't mean it's a great entry signal. And look, it falls. Look at how the RSI is not through the liquid 50 until about 4 or 5 candles later. And no, you wouldn't want to enter anywhere in here because it's off the 8 EMA. And the reason we don't want to enter off the 8 EMA is because that's our buffer line. When it breaks the 8 EMA coming back against us, that's where we want to start to, pull out of our trades. But when you're entering off the 8 EMA, a lot of time you'll get caught in no man's land. You're catching the end of a move. And even if you have the overall direction right, like let's say, for example, you entered at the bottom of this candle, you still took drawdown. Even though it ended up moving, it still could have induced you to get out because it was pulling back and you knew you were, entering at a bad time. It doesn't matter. Trust me and trust the back testing in that if the entry candle is not coming off a solid EMA, and a solid EMA qualifies as the 21, the 50, or the 200, then I wouldn't trust it. And again, if it's not confirmed by the TDI like this one, if it's off, it's almost there, but it's not there, higher probabilities tell you to just wait for a better trade, wait for a better setup. Here's another example. You see RSI is well above the trend line from 9 a.m. into 10 a.m. The shift comes off the 21. It's in an uptrend overall. 50 is above the 800. 200 is coming up as well. And as you can see, it holds the 8 and moves higher for you here for about 10, 15 pips. So now let's talk about combining everything together and looking only at the 1 hour chart. I've shown you some examples of the 15-minute chart up to this point, and now I'm going to show you some examples of the 1 hour. We're going to move back into the 15-minute time frame as we get through this chapter. But for now, I want to show you how you can apply this strategy to the 1 hour time frame. Now, this is something that's going to be more of a swing trading strategy. This is something that you will have to hold for multiple days sometimes. But that can work out in your favor because you're going to be able to trade the same pair in the same direction for multiple days. And again, that goes back to you only need one good trade per day. We'll talk more about the one good trade at the end of the course. But for now, just keep in mind that with this 1 hour strategy, if you can find one good one of these a day, you're slowly going to be able to grow your account by consistently winning trades. And then again, that's only going to increase your size. But before we go into all that kind of risk management psychology stuff, let's finish up here with these charts. So let's talk about the 1 hour here on Euro USD. You see we have a dropping TDI, dropping liquid 50. Everything is coming lower. At the time that we get our shift candle here, off the 50, through the 200, and through the 21 and the 8, we then also get our TDI confirmation with the RSI value being below the trend line and below the liquid 50 in the sell zone. This trade runs 47 pips into the next day, never breaking back above the 21 EMA. You risked 20 to get almost 50. So again, with a strategy like this, your 15, 20 pips is getting smashed. And if you're going for 40 here, you got that as well. So even if you're just reading and reacting to the chart, this is a beautiful setup that you want to be involved in because it never gives you an exit signal. Yes, it breaks the 8 EMA just barely, but you see how quickly it'll push off that 21 and keep moving, especially after you have a shift candle. Once you shift down, anytime you see a downshift, you're going to look for pullbacks to the 21 EMA. The one thing that I would say could decrease your probability in a setup like this would be that the liquid 50 was in the buy zone for majority of the day that you would have been entering the trade. The entry takes place here with this strong bar off the 50, like I said. But beforehand, as you can see on the TDI, this was in the buy zone. So only up until maybe 9, 10 o'clock did this move into the sell zone and kind of fall back into that downtrend. So sometimes, if it's not in one zone all day, it's very difficult to trust how strong that trend is. Now, in the next day, when we get a push off the 21 with a nice 2-candle formation here, and the liquid 50's been in the sell zone and falling, that also to me could be another entry signal. If anything, that would be a better entry signal when we talk about could the trade be better because the liquid 50 is in one zone all day, and that's a huge factor in determining the probabilities of our trade. Now, you can see I have this one marked up where you would have only been risking 15. The entry was about 3 a.m., and perfect 2-to-1 gets smashed, 30 pips by 12 o'clock noon. So again, the shift candle could have been a trade, but if you missed it and it continued to drop, you would just stay on it. You had the right direction. Look at the liquid 50. It's telling you where to trade it. EMAs are confirming it. Now just wait for the right candle formation. Here, it's at 3 a.m., and there's your entry signal. So I have about 70 markups that we're going to move through now. We're going to continue to focus on the 1 hour, but I want to pause just to make note of a few things. First, remember, we are going to always look at the liquid 50 as the first thing we look at for analysis each day. You're going to look and ask yourself, what is the TDI telling me that we should be doing today? Then you want to look at the EMAs and see if they can confirm that direction. Here, price action is above the 50, the 200, and the 800, so we know that we're in the uptrend, confirming what the TDI is telling us. Then you want to run through, is it overbought? Is there space on ADR? And are we still inside the Asian range? If those parameters are met, if you're outside the range, you have space on ADR, right? And the candle formation is coming off the solid EMAs like the 21, the 50, or the 200, then you know that it's probable that the trade should work in your favor. Now, remember, not every trade is going to be a winner. So that is why we have to exercise proper risk management and be willing to take losses. Be unemotional. Something I really preach on a lot is to detach yourself from the results. And again, we're going to talk about this in the risk management chapter, but detaching yourself from the results is very, very difficult. But if you can master that psychological skill, you're going to find trading to be a lot less stressful. And as you find less stress in your trading, your results are going to do a lot better. Your P&L is going to continue to increase. So here, with this setup, right? Everything's in our favor. Probabilities are that, yes, we are going to move higher. Now, this is AUD USD. It's a slower pair. It doesn't just take off like GBP NZD does. However, if you, again, just look at the chart in front of you, we're in this trade at 11 o'clock on the 26th, 11 o'clock in the morning. It carries you into profit 50 pips by 2 days later on the 28th. So you move through the 27th all day in profit and into the 28th all day in profit. So these, again, on the hour chart, when we're seeing these advanced entry signals on the hour chart, they're going to run potentially for multiple days. Your stop is always going to go with the entry candle open price plus your spread. So here you were only risking 10, and as you can see, 5-to-1 on this in 2 days. And all you got to do is read what the chart is telling you. Look, TDI never hits overbought. Liquid 50 holds beautifully in the buy zone, and the EMAs continue to fan out in that uptrend. Again, as these things move in your favor, you want to read the chart and react. Not, oh, this could happen, it could shoot down, oh my God. No. You're not going to be emotional like that. You're not reacting that way. I'm not going to allow you to do that. Read the chart. Once it tells you, okay, trend might be ending because the EMAs are broken. Trend might be ending because the TDI is switching zones. Things like that are valid reasons to get out of a trade. But other than that, if you want to be a good trader, you're going to need to learn how to read and react. Let the chart continue to move in your direction. And again, that goes back to what we talked about in chapter 1, where Forex pairs trend a lot. They are not choppy markets. They don't gap 50%. They trend. These are trending pairs a lot of the time, and that's what we can take advantage of. So another breakout formation here. This is AUD USD again. This is during the Asian session, and it's valid because the Australian dollar is open during the Asian session. This candle comes off the 21, new high of week, above everything that happened the previous day as far as the price action trading. It breaks way above that. So again, when we see that breakout, we would look at it and say, okay, trend should continue. The stop is going to be at the entry candle open price, because if it breaks down to that point, it's going to be under the 21 EMA. And if it breaks under the 21, I don't want it. So again, you take the trade, you trust the stop, you let it be. Go 2-to-1, go for that 15 pips. Here, your 15 is reached, and again, more than 2-to-1. This is almost 4-to-1 here. It goes 40 pips, only risking 10 again. So smaller stops here, notice on AUD USD, because it's not a very volatile pair, like I said, but it still puts money in your pocket if you're patient. So when you really start to master this for yourself, you're going to want to ask yourself, do I like the action? Am I a volatile trader? Do I want to be in pairs that move? Am I willing to take that? Am I going to sweat through that? Or are you looking for more trending, not even more trending, more slowly trending currency pairs that they trend and just like the other volatile ones do, but they move as far as daily ranges, they move a lot less. So whatever fits your strategy best, I'm showing you examples on both sides. AUD USD on the slower side, and we're going to go into some GBP pairs in a second that are going to show you a little bit more volume. Here, this is combining a little bit what we talked about with market structure. You want to start to draw these trend lines in, and when you draw them in properly, you're going to be able to take advantage of really solid breakouts. So here, when you see no divergence, because again, you start on the RSI drawing your trend line, right? You match 2 points here, and then you match the same 2 points on price action. When you see there's no divergence and there's actually confluence, that it's an ascending trend line, and you get a 2-candle breakout formation off that 21 through that trend line and confirmed with the RSI coming through that trend line in liquid 50, you know that that's a probable breakout. So the stop goes at the entry candle open price up here, right, where the consolidation previously was. And as you can see, if you hold the trade, it does take you to profit, but then chops around overnight because this pair slowed down overnight while there was the changeover of day. Here at the end of the New York session, NZD and CAD are both, one is closed and one is closing. So not the most volatile time, but you're right on the trend. Look at the liquid 50, look at the EMAs, and this drops 43 pips into the next day. Another breakout, AUD USD, 2-candle formation off the 21. Trust that entry candle open price as your stop. RSI confirms it with the TDI cross, and you get 25 pips here, only risking about 9 or 10. More than 2-to-1 again. So again, I'm going to show you some losers, but pay attention. A lot of these breakouts are winning trades. All you have to do is wait. I can't stress it enough that waiting is the key with this system. Now, this is GBP AUD, and I mentioned to you a second ago that the GBP pairs are really where the volume is right now. That's in market conditions today of July 2019. It's very volatile. There's a lot of volume, so that's going to help us find really good trades that are going to move for us. Here, it's a 2-candle breakout off the 50, off the 200, and off the 21 EMA. RSI is above the trend line, above the liquid 50, in the buy zone, and it's not overbought. It is counter trend to the EMAs, and we've talked about this a little bit here. You see how the 50 EMA is slowly crossing up your screen. You didn't know that it was going to cross the 200. At the time of your entry, the EMAs were still technically in a downtrend because the 800 was on top, then the 200, then the 50. But as the day went on and into the next day, those EMAs started to cross. And when you trade counter trend like this, when the TDI tells you to buy it, but the 800 EMA is on top, you want to use that 800 EMA as your take profit level, always. Sometimes it'll break through, sometimes it won't reach, but using that as your take profit level is the best bet. And as you can see, that works really well here. It's 104 pips, only risking about 26. To me, that makes sense every single time. I'm always going to risk 25 to go get 50, 75. And then here, knowing that the 800 EMA was about 100 pips away, I can get 4-to-1 out of this. I'm going to take the trade. It's an entry at 4 a.m., but by the next day, before noon, you're well into profit. So again, it's an overnight. You have to be patient with it, but they do move in your favor more often than not. So before we move into the next example, this is GBP AUD, I want to make a note of something. These patterns may start to seem repetitive. That's because they are. But for me to really get the message across to you, for me to really explain to you how unique each trade is, I can only show that to you by repeating markups over and over and over again, showing you the patterns and the unique variables that go into how every single setup is its own setup. Nothing is ever going to show itself exactly the same way again. It's kind of like, I guess the first example that comes to my mind is a snowflake. You know what I mean? How they say each snowflake is unique. That's like each trade. Each trade is so unique in its own way. So you have to just see them over and over again. And that's why I'm a big believer in working very closely with traders that go through my course. You now a part of our family, because I know how each day can almost seem like I never knew that. I never knew that. I never knew that. And that's a good thing. You want to embrace that feeling of, oh, I'm learning. That's what's going to keep you profitable as the market continues to adapt. But the point is, I want you to remember, these trades are not repetitive. While the patterns do repeat, each trade is unique. So pay attention, take notes, take screenshots. If you have any questions, you can always reach out to me. Now let's talk about GBP AUD. This is a 3-candle formation off the 21 EMA, off the 50 EMA. Look at how nicely the RSI comes down through the trend line and through the liquid 50 at the same time. This is right at 5 a.m. Your stop would go at the entry candle open price at the 50 EMA. It's about 35 pips away, but it drops 60 pips for you. So you're almost 2-to-1 smashed right there within just the first few hours. You see then it kind of chops sideways and gives you more opportunities to get out the next day even in profit very nicely, 50, 60 pips. But the trade itself, the formation is clean. You see the shift candle. The shift wasn't super clean. It was overnight. So it's like, okay, we shifted down. Now let me see. Where's my formation? Where's the pullback? Okay, are we done the pullback once we get to the 50? Yes, we're pushing off the 50. We break under the 21. This is the formation. If I'm going to take one, it's a shift candle, and then now I'm getting in on the pullback. The pullback is done, and trend is ready to continue. Here's another 3-candle formation. This one, you can see, gets actually shoved down. This was a breaking news event. Trump tweeted, don't ask me what, but Trump tweeted and ended up shoving this down 110 pips, only risking 28. So I was only probably going for 50, 60 pips out of this trade, and it got smashed. But look at how long the liquid 50 was in the sell zone. It wasn't just this day. It was the day before, and the day before, and the day before. It was clearly in a downtrend. You can see the EMAs going left to right, going down across your screen. That's, again, another confirmation that you're in this downtrend. So seeing this break really hard like this to the downside, breaking the consolidation where hit once, hit twice, hit 3 times, hit the 4th time overnight, finally we get our 3-candle formation 15 minutes before breaking news comes and shoves it lower. Either way, this was going to move down. You can see it even still pumps back down again the next day. So another shift candle here. That's a nice one. Right off the 21 EMA, you see the retest of the 50 overnight. It can't even hold the upshift. It tried to shift up, can't even hold it. Pushes back down. Look at how well that RSI comes under that hooking trend line, breaking through the liquid 50. Liquid 50 is dropping, and it's in the sell zone. So everything there looks good. Now remember, you want to take in ADR into account in these trades. This pair, GBP CAD, its ADR will go 120, 130 pips. So to see this only go 150 across 2 days is actually kind of surprising. But when you talk about your risk versus reward, you're only risking 26 pips here. This is over 5-to-1, 5.5-to-1, you can see. So the trade itself was still well worth it to be in it. Even though it only moved 152 pips, you can still make that 152 pips count. While it might only be $152 for some people that are just starting out, we've got people that are going through this program ready to start trading with 6 figures, and this trade could be $1,500 for them. This trade could be $3,000 for them. So these wins can add up, and if you can take advantage of them, especially because they're multi-day, you can see this happens at 9 a.m. and carries into the next day around the same time. Because they're multi-day, they're easier for people that are just getting started or just don't want to be attached to the charts as much. So keep that in mind as well when you get into the 15-minute markups, that these 1-hour markups are really where the part-time people, the people that are, again, not looking to be glued to the screens, that's where you guys can focus, is here on the 1-hour entries. Again, another really, really good shift candle. This is GBP CAD, clearly in a downtrend. You see the 800 EMA up there. Liquid 50's dropping, not oversold, but this trade takes it to oversold. And this goes 190 pips, only risking about 44 pips. So you definitely got your 80 here by the end of the day, but it pumps another 100 and about another 110 or so into the next day. Well oversold too. So you'll say, Austin, I thought you said if it's oversold, we don't want to sell it. It might not move lower. Right. Most of the time. There are absolutely situations where it'll be oversold and stay oversold and actually go lower like this. But you can't predict that because our system here is built to just say, look, if it hits oversold, we're going to knock that. For us, that's going to mean it's less probable. So we're going to look for something else. And that works. Yes, this is money, but that doesn't mean it's your money. Hope that makes sense to you as well. This is showing you that shift on the 15th here that I just showed you. Look at how long it ended up running. Well after it hit oversold, look how price just continued to drop. 450 pips almost from that original entry. And that takes, look how many days. I mean, that's Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday. That is a week. That is a full week there. But it's almost 500 pips. And again, read the chart. It never breaks the 21 EMA. You could have put your stop at break even and just said, okay, I'll leave a small piece of this original trade on, I'll close most of it, and I'll let it roll. And you can absolutely run these trades in that way as far as your risk management approach. Here's a really good 2-candle formation. This broke consolidation, was making lower lows. The shift candle was earlier in the day. We weren't awake for that, so this comes at 215. If you're up, this is a nice one. 7 pip risk at the top, right? Because that's your entry candle open price. Drops 14.5. I mean, 2-to-1, it's perfect. Euro AUD here on the hour, right? Liquid 50s in the buy zone. EMAs are in an uptrend. You see this candle's off the 50, off the 21. It's a nice shift candle. 110 pips into 2 days, only risking 20. So again, another 5 to 1 here. So if you're looking at 2R, you're getting it. You're looking at 3R, you're getting it. These trades, when you find good ones with a good TDI, good trend line, good EMAs, and good ADR, these are going to look beautiful and they're going to run for you like this. Look at how long the RSI was above the trend line. And then look at how long the Liquid 50 has been in the buy zone. So there's no way we're trying to sell it. We are only looking for longs, and this shift candle was the perfect long entry. Again, another example here, RSI under the trend line already, comes through the Liquid 50 at 8 a.m. It's a candle off the 21 EMA after a nice pullback here in an overall downtrend. You see we're in a downshift. The stop would go right at that entry candle, open price plus your spread, so probably about 27, 28 pips away. It does pull back. It does pull back pretty hard here, but if you use the correct stop, which is your entry candle open price plus your spread, you're going to be safe. It breaks the 21 for one candle, and we know our 21 EMA rule from the beginner strategy. It's the same thing here. It only breaks for one small candle and then quickly comes back down. You know you're still in the downshift, so you don't want to switch your bias and think it's coming higher. Just stay short biased. And look what it does. Ends up coming down 53 pips to the 800 EMA. So this is trusting the TDI, trusting that Liquid 50 in the sell zone, saying we're short biased. Seeing the shorter term EMAs, the 200 and the 50, above price action, sending us down to the 800 as our floor. We know that 800 is our price target. So you know you're looking at about 50 pips worth of profit. To only risk 27, 28 to go get 50-ish, 55, that's a good trade. You know that that's where you're going to look to take profit, and that's exactly where it goes. And it stops with a beautiful hammer candle right there. So before we move forward into a few more 1 hour chart markups, I want you to understand again just the risk management that goes into these trades, because sometimes they will not reach that full 2-to-1 risk reward ratio in that day that you enter the trade. But when you're taking a trade off the 1 hour chart, you don't need to check the 15-minute time frame, the 5-minute time frame. You don't need to worry about those because your entry signal is based on these 1 hour candles. And really, you only have to look to enter the trade on the close of every hour. So 9 a.m., 10 a.m., 5 a.m., 4 a.m., on the close of the hour, on the changeover of the hour, is when these candles will say, okay, boom, here at 10 a.m., this candle pushed off the 21 EMA. That's when we're going to take our trade at 10 a.m. exactly. Stop loss at the entry candle open price, and you look to get 2-to-1, and that is reached into the next day. So as these trades develop, you have to be willing to be patient. It will, like I've said multiple times, take a few days sometimes to reach that full 2-to-1 or 3-to-1, whatever you're going for. So it's important to apply everything we've talked about earlier in the course as far as how to read EMAs, how to read the TDI, to see if the trade is still going to work out in your favor. Here, there is no exit signal. From when you enter to when it reaches more than 2-to-1, so your take profit would have been smashed at 2-to-1, it never broke the 8 EMA. It didn't even touch the 21, let alone break the 8. So very, very easy to say, look, while it might be taking its time, it's not telling me that the trend is done yet. So I'm going to hold the trade and give it time because the back testing shows us that these are going to go 2-to-1 more often than they're not. Here's another really good example. I love the trend line here on this one where the RSI comes above that here, probably about 4 hours, 5 hours beforehand. So the RSI is already in position in comparison to the trend line. The TDI is in the buy zone, Liquid 50s in the buy zone, candles are above the EMAs, and this shift bar comes off the 21, pretty close to the 50 EMA. We had a couple pins to the 50. You see here, the pin, retest, can't break it, pin, multiple hours. Basically, the entire day was saying, we can't get below the 50. Well, where's the TDI to trade? Long. So candles are saying I can't get under the 50 EMA. I can't break. It's like 111.39, 111.40, right? I can't break underneath. TDI is telling you to buy it. So very clearly, you're long biased. And if it shifts up as it does here at 9 a.m., you take the entry and look at this. Never breaks the 8 EMA up to 30 pips. So 3-to-1 here very, very nicely. Within 24 hours, this is you enter at 9 a.m., you're out of the trade at 2-to-1, probably by 5 p.m. If you hold it to 9 p.m., you're getting that 3-to-1. So again, it's not a full 2 days, but it's not that first day either. So you have to be patient and read the chart. Another good shift candle example here. And this is an important example to highlight because, one, the EMAs are not in full trend yet. You see the 200 EMA is above the 800, and we know to be full trend, to be the best probability trend when we're trading short, we'd like that white 200 EMA to be below the dark 800 EMA here. On top of that, it was oversold the day before and the day before that. You can see here's the changeover of day. So it ended the day oversold and carried into the next day oversold during the Asian session and into the beginning of the London session. So yes, you're oversold, but look at the TDI. It's telling you to sell. EMAs are coming into the downtrend. So if anything, you got to be short biased. You can see the small ascending trend line there, right? That would be matched up on the TDI. That would tell us that if it's broken to the downside, it'll fall. If it's broken to the upside, it could rise. And here, it breaks to the downside with a beautiful shift candle off the 21 EMA, and again, never breaks the 8 EMA. It drops almost 3 to 1. You're risking 27, and it goes 75 at most. But look at that, outside the 8, hour after hour after hour. Really, really nice trade. It hits oversold here, so once it does come down and hits oversold, you could look to take the trade there if you're not out at 2 to 1. Oversold, like you're going to be up almost 3 to 1 at that point. Just take the trade. Move on to the next one. You banked it. It's a good winner. Go to the next one. Here, this one's interesting. I wanted to show you again some losers. EMAs are in trend. You see the 200 is on top, but the TDI isn't great. You see how it starts the day in the buy zone and drops into the sell zone? I call this a swapping TDI. We talked about this a little bit before. The swapping TDIs decrease the probability of trend. So here, we are short biased because EMAs say sell and the TDI is in the sell zone, but it's not a great trend because what's the question we always want to ask ourselves? What could be better? What could be better here is that Liquid 50 could be in the sell zone instead of in the buy zone to start the day. That would be a more probable trend for us. But you get the 2 candle formation here off the 21 EMA. It breaks past yesterday's low, right? You see that yesterday's low is set here, tested right into the changeover of day. Couldn't be broken overnight, but then finally here at 4 a.m. it shoves and breaks. Notice here, this ends up only pushing a little bit more than 1 to 1. You're risking about 15 and it falls about 18 in that next hour and then quickly pulls up, breaks the 8 EMA, and this candle here was actually a news candle. So it's an important example to realize for 2 reasons. One, we already talked about, was the TDI. 2 is that it was trading into a news event. This comes at 8:30 in the morning here. This is a CAD pair, and this is a CAD news event. I remember this day like it was yesterday because we were in this trade, and when it pulled back here, we got out at break even because we knew that going into the news event, it was a high impact CAD event. You now know we don't trade into high impact events. So what? We left 18 pips on the table. Big deal. Take the break even. Don't lose any money. Come back the next day and find a better setup. And that's how you would handle this one. But again, you can avoid trading this, in my opinion, completely. And that's just my opinion now because over time I've realized that less is more. But you could avoid this just by not going after a swapping Liquid 50. It's not necessary. You can find better trades. And if you don't, just come back the next day. You'll find 4 good trades potentially the next day. This is a beautiful 3 candle formation. I love this right leg pushing for a new high of day, pushing past yesterday's high. As you can see, yesterday's high was set here at the changeover of day, tested during the Asian session, and then broke out above that. Beautiful TDI, right? Never overbought, holding in the buy zone, flat if not rising. RSI comes through the trend line, through the Liquid 50. It's beautiful. This 3 candle formation goes 34 pips, risking about 18, and you almost get 2 to 1 there. A really nice trade. It goes up 30, 35-ish, pulls back down, breaks the 8, pops back up. Really gives you a good opportunity to make some money here. If you don't get the full 2 to 1, you're still going to make good money on a trade like this. If you're watching, see when does it break the 8 EMA? When does it break the 21? When does the RSI cross back down under the trend line, cross back under the Liquid 50? Is the Liquid 50 starting to fall or move in the opposite direction from the direction that I'm trading? Those are signs that you want to maybe get out of the trade. Take the winner and move on. This was a nice one too. This is NZDCAT again. This is off the 21 EMA. Liquid 50 has been in the sell zone from the previous day and the previous week because you can see this is the 8th and then into the 10th and the 11th, so over the weekend. So you were selling it. You were short biased from the week before. Here's your 2 candle formation. Stop 17 pips above your entry price at the entry candle open price and hold it all day. It never breaks the 8 EMA. 44 pips over 2 to 1. No problem. Where's the Liquid 50 pointing? It's falling. RSI falling. EMAs in a downtrend. So you very clearly are short biased. So even though it pulls back here and pins that 21, don't let that scare you. You shouldn't be judging the trade based on what it's doing in the middle of a candle. This candle closes as a doji still outside the 8 EMA. That says, oh yeah, it was just pinning. It was just grabbing some orders. Leave it alone. I'm still holding this trade because it did not break the 8 and close above the 8 with a body. That's the signal that trend could be weakening. So now that we went over the 1-hour charts, to recap that just briefly, understand that the best way to use the 1 hour entry and exit signals is by only focusing on the 1 hour chart. That's for people that are looking for swing trades. That's for people that have part-time jobs and don't want to be glued to the charts all day. If you're an active trader, if you're looking to step this up, if you're looking for more trades, the 15-minute, the 5-minute, and the 1-minute are, of course, going to give you more action. So as we move through this next section here, the signal is the same. The entry signal that I just showed you on the 1 hour chart is the same exact signal that we're going to look for on the 5, 1, and 15-minute charts as well. When we talk about the signal itself, a lot of the time you'll be able to use the 15-minute chart and then move your way down to the 5 and 1 minute to find even more confirmation or reasons to not get in the trade, but you're able to use all three time frames together to help you feel confident in the direction that you're trading. So we're going to work through first a lot of 15-minute chart markups, a lot of 15-minute chart photos. That's because, like I just said, the signal is the same on the 1 hour, the 15-minute, the 5-minute, and the 1 minute. The difference between the time frames, the difference between the way that I use them is I'll use the 1 hour charts at any time of day. I'll trade the 1 hour charts in Asia if the Asian pair is open. I'll trade them in London or New York as well. The 15-minute chart, because I like the action, because again, you need volume if this is going to work. You need people actually trading. I'm only trading on these shorter time frames from 6 a.m. to 10 a.m. New York time every single day, 4 hours per day. That's when I'm looking for my day trades. Now, I could wake up earlier and I could start at 5 a.m. I could start at 4 a.m. I used to, but for my health, for what I'm doing right now and the size that I have with my account, I'm very lucky that I can do what I need to do, make my money in the 4 hours a day that I trade from 6 to 10. So, depending on where you are in the world, I know people are watching this from every corner of the earth, which is amazing. Depending on where you are in the world, you want to make sure you build a consistent routine that you can follow. I recently went through some changes in my life. I moved and some other things that happened where I decided I didn't want to wake up at 4 in the morning anymore. So I wanted to wake up an hour later and do a little bit of a routine before just jumping to a chart and ruining my eyesight basically by staring at a computer screen. So I've now built myself a schedule where I'm still on the charts for 4 hours a day, still there when the most trading is done because London and New York both trading at the same time. Both the London and New York sessions are open. And that's why when we're using the shorter term time frames, we want to be able to just trade during, in my opinion, the volatile times, the times when there is the most active participants in the market. So we're going to move through the 15-minute charts. If you want to take this a step further, and I'm going to show you some examples of that as well, you can use the 5-minute and 1 minute within these 15-minute candles to find even more confirmation for your trade. So if you can 15-minute setup, like I'm going to show you here, in that 15-minute candle, within that 15-minute candle, there's 3 5-minute bars, and there's 15 1-minute bars. And if you can go into those shorter time frames and find more crosses, more RSIs crossing through the liquid 50 in the proper zone, more candle confirmations, you're going to have more confidence in the direction that that trade is going. The reason that I'm explaining it to you this way is because nothing is 100%. You could just trade these formations on the 15-minute chart and make a ton of money. You could trade them on the 15-minute, the 5-minute, the 1-minute, use all three and still make a ton of money. You have to work this in whatever way suits your characteristics the best. So I'm going to show you, like I said, on the 15-minute first, and then we're going to put the time frames together, and I'm going to show you some multi-time frame examples as well. But remember, the same rules from the 1 hour chart markups apply here. We're entering on candle closes to be safe. We want strong 15-minute bars to close. So that means we're not taking an entry at 8:13 in the morning. I'm going to wait till 8:15, and if I don't enter at 8:15, I'm not going to enter again until 8:30. That's the way that this strategy is built. The stop loss when using the shorter time frame is the same. It's your entry candle open price plus your spread. The take profit is the same. We're looking for 50, we're looking for 2R and 3R. There's no difference between the 15-minute and the 1 hour, except that you can use the 5 and the 1 minute with the 15-minute to really find confidence in the setups that you're looking at. And again, it always comes back to the TDI. So here, we're looking at NZD-JPY on the 15-minute. You can see the liquid 50s in the sell zone from the previous day and into the Asian session here. You get a really strong shift bar. I mean, look how much bigger that bar is than the previous candles. It was basically consolidating and waiting for that shove. This happens at right around 9 p.m., almost 9 p.m. You get the breakout, and notice how from 9 p.m. all the way basically to 1 a.m., you do not even break the 8 EMA. This falls 39 pips, only risking 15. So again, more than 2 to 1 with no problem. You'll see pretty quickly here, guys. These signals on the 15-minute, like I said already, are identical to the setups on the 1 hour. Here, NZDJPY again, a 2-candle formation off the 21. EMAs are not in trend, so if you were grading this on your checklist, that definitely could be better. You'd love to see the 200 below the 800, but still telling us it's in a downtrend. TDI very clearly in the sell zone, and at the time of entry here, 6:45 in the morning, the RSI comes through the trend line, through the liquid 50, and as you can see, it does retest the 8 once, but ends up moving lower. It breaks the 21 for a brief second there, right at your entry price, and then quickly comes right back down. And if you, for some reason, happen to get out of the trade here, if you look right here, there's another formation, another 2-candle reversal formation right here that actually takes you down as well. Just reading the EMAs, just reading the TDI. It's in the sell zone, and the EMAs are telling you to stay short biased, so you want to give it the time it needs. Never does it give you a really solid a solid exit signal saying get out. Here it breaks for 1 candle and quickly comes back into trend. And if you did get out, then you could get back in here. So wait for solid entry signals, wait for solid exit signals, and let trends build. You have to be able to give them time. This is another example, GBP CAD here. This is a 2-candle formation off the 50, off the 21, with a beautiful RSI cross here under the trend line, under the liquid 50. Liquid 50 is falling all day. This is really, really nice. 4:15 in the morning, never breaks the 8 EMA. It falls 50 pips, only risking 21 pips. So again, another example with 2-to-1 risk reward reached.